is Dr. Briscoe here. I'm a teacher at Suncoast Community High School, and we're on topic 2.2. This is the daily video 2 on structures, powers, and functions of Congress. And today we're going to look at how Congress creates a budget, how it has to ensure that it is handling mandatory and discretionary spending, and what pork barrel and also log rolling have to do with Congress making those decisions. Okay, so last time we did in 2.2, the first video, look at structures, powers, and functions of both houses of Congress. So that's going to come back into play for this video. And we are here describing how Congress must create a budget to address both discretionary and mandatory spending. So we are with our task verb describe, provide the relevant characteristics of a specified topic. So what will we learn? Remember we talked about the power of the purse, or Congress's constitutional ability to be able to raise revenue and then also to spend money on behalf of the government for things that the government decides is important. So we can look at Article 1, Section 7, Clause 1 to find the wording that talks about the Congress and raising revenue, specifically those bills originating in the House of Representatives, and then for the spending, no money drawn from the Treasury, but in consequence of appropriations made by law, and a regular statement and account of the receipts and expenditures of all public money shall be published from time to time. So that is just saying that there needs to be a law that is put into place in order for money to be taken out of the Treasury to pay for the debts of the government, and that there should be some reporting that is made to the public. All right, so here we've got the same thing again, just kind of set up a little bit differently, where we've got the Article 1 talking about the money coming from the Treasury, and then also that the bills for raising revenue that is bringing money in is going to come from the House of Representatives. It is not specific as to how that raising of revenue is going to be done. It just, the article says that the Congress has the authority to do that. So by the time we get finished, you should be able to answer the following questions. How does Congress generate a budget? How does pork barrel legislation and log rolling affect lawmaking in the House and the Senate? How do increasing entitlement costs impact discretionary spending? And how does Congress decide to increase tax revenues or to run an increasing budget deficit? So the creating the budget is pretty complicated. So we're going to just look at the basics here and not get into too much of the detail, but enough for you to understand how it works. So we understand that the budget is basically an explanation. The budget for them, similar to a budget for anyone as an individual or a business, in that you are, laying out, how much is coming in and what it is that you need to lay out in terms of paying your expenses. So we have those actors that are involved in this budgeting process, and that's going to be both houses of Congress. A budget proposal is going to come from the executive branch, and that is going to be the Office of Management and Budget that will assist the president in creating a budget proposal. There are a few federal agencies that are involved, and then interest groups in terms of making the case for what it is that they want to see Congress spend money on relative to the interest of that particular group. So starting with the Office of Management and Budget, they're the ones that are going to help the president create a budget that has something to do with what the president thinks is most important. That is the president's agenda. So the Office of Management and Budget is like the president's accountant. And so they're going to look at all of the federal departments and agencies, what it is that they need. They're going to look at what the economic philosophy of the president is. Is it, maybe to be more conservative in terms of spending, or maybe have certain areas of focus that the president wants to see money spent on? Revenues, how much money is coming in, and then other considerations. Once that proposal is completed, it's going to be sent to Congress in usually February, in anticipation of there being enough time for Congress to get their piece done and back to the president for approval before the end of the fiscal year. Congress is going to use their own Office of Accountants, that is the Congressional Budget Office, and these are nonpartisan accountants. They are not wedded to one party or another. They're going to look at the current budget, and then they're going to prepare projections as to what they think is going to be necessary for the next year. And again, that fiscal year goes from October 1st to September 30th. So Congress looks at the president's budget and, will, take into account. They don't have to, agree with anything that's there, but they are going to take a look at it and possibly, talk about some things with the president if they are thinking that they want to, do some negotiation potentially. Then they have to do something called reconciliation. And so they're going to be looking at any changes that need to happen to increase money coming in or spending going out. And they have to attempt to get this done, to show that the budget is balanced before they go to their final vote. So the budget is going to reflect money in, that's revenue, and those sources are individual income taxes primarily. That's the biggest part. But we also have corporate income taxes, payroll taxes, and some other taxes that are going to add to that pool of money that comes into the government. Then the money out, we've got three categories of government spending: mandatory spending, money that must be spent based on laws that have been made; interest on the debt, the money that has been borrowed, there's interest on it, and that interest has to be paid; and discretionary spending, that is whatever is left. It's about 40% of the total budget, or was in 2019, and that's what's going to be used to pay for anything else that the government wants to pay for. So what we end up with, we've got our mandatory spending, discretionary spending, and then when we speak about pork barrel and earmarks, we're talking about members of Congress and what it is that they want to do that is going to benefit specifically their own constituents in their states and districts. And so they're going to, attempt to the extent they can to get some money so they can show the people that they represent that they are taking care of them. So then they can hopefully get reelected because they've done some things on behalf of the people. People want to see that money that they put in is going to come back to them in some way. Then we have earmarks. And so that is those spending bills that are specific line items, and it is going to be a requirement for spending, and it's an attempt to funnel money to a particular vendor or business. And there are members that are opposed to doing this, and others that think it's an awesome thing and another way to build confidence and get reelected. But it is what it is. And we talked about the grants and aid before. Remember those different kinds of grants? That's going to be part of that bigger picture of money coming back to states and localities for them to have different amounts of choice in terms of how that's going to be spent. Mandatory spending has increased from about 30% in 1950 to 70% today. So you've got to figure out how to balance it, either by decreasing discretionary spending, defense and non-defense, increasing revenue by increasing taxes, or borrowing money, which is going to increase the national debt, or some combination of the three. You have to do something in order to account for the increase in mandatory spending. So here we have a graphic of the federal budget coming from the General Accounting Office. It's showing mandatory spending, discretionary spending, and as money that is going out. And then we've got the revenues up in the right upper corner that's showing the money that's coming in. So come back and take a look at it. It's pretty interesting, showing you, how it is that money is being spent and where it is that it is coming from. So we've got a couple questions here to go over quickly. And an example of a discretionary item in the federal budget is going to be spending on national parks. Which of the following scenarios best illustrates a member of Congress supporting pork barrel legislation? That is something that's going to be specific to helping his or her constituents. So we've got a senator that is amending some legislation. We don't know what it's about, to establish a potato research institute in his or her state. That could be Idaho, maybe. And we know that it's a senator, and then we could maybe think about that being a non-germane amendment, because remember, the Senate can do that where the House cannot. So what should we take away? Got a lot here. I am just, listing out here what the process is of creating the budget, and then what the impact is of the pork barrel legislation and log rolling in terms of how it affects lawmaking in both the House and the Senate. And continuing with the rest of those questions about the increasing entitlement costs and what does that do in terms of discretionary budget, and then how Congress is going to decide to increase or decrease revenues. We have philosophical perspectives from conservatives and then from liberals, and then sometimes it's just about, I think that we should do this, and it doesn't have anything to do with party or ideology. All right, so we're back where we started and learned how a budget is created, and so we will stop there. Be sure to come back and take a look at those slides with the graphics on there. All right, thank you. See you next time.